So I've become a communicator. So not only as an analyst, also an investor, but also a communicator.
Right.
And I've been doing that also within Goldman Sachs and other places. I realized that I was a good communicator. Then everything changed in 2008. I saw the financial crisis coming. I'd written about it and made money from it. My clients made money. Many of them were the famous investors from the film The Big Short. But a lot of people got hurt. And it wasn't that bad in Europe yet. Then 2012 came. In 2012, we had the European crisis, where almost all the governments went bankrupt and the banks were going under. And friends of my parents and friends of friends were having money taken from the banks as banks shut down. Friends who were in the real estate industry were out of business, and they were angry. And everybody was angry at this point. So Occupy Wall Street was the US anger from the young people saying, what is going on with the financial system? Why are we losing our jobs? Why are we losing our houses? Why are our parents going bankrupt? What is going on? And then in Europe, in Spain, we had the Indignados, the 4 million people, I think, who marched to the streets of Madrid from the provinces. Anger. And I realized that people didn't know what was going on. The financial system was in fact broken. There had been so much debt built up over the decades prior that it had made it very fragile. And nobody understood this because everyone thinks your money's safe in a bank.
Right.
A government is safe. Well, if you're from Latin America, you'll understand you don't think
you're never
things.
safe. Period.
You don't think those things in Latin America or South America or wherever. But at the core of the financial system, the US and Europe, that is the fundamental belief. And then that got shattered. So I thought, I need to do something about this. And I looked at a two-pronged approach. One was, okay, can I find a bank that's safe? Because banks use something called fractional reserve banking, which means the piece of whatever you put in is relent multiple times.
They have, I think, 10 times more than to create of whatever they're lending, right?
Yeah, and sometimes in the financial system, a US government bond, which is deemed to be the safest thing in the world, had 30 different claims on it. So when you come and say, I want my money back, 30 people have a claim on it as well. It's quite screwed up, but it's how the banking system works.
Yeah.
It's called fractional reserve banking. So I went around the world trying to start the world's safest bank. And it was difficult. And I went to Singapore, Switzerland, the UK, and the US. And we almost bought a bank in Texas. And we had the chairman of the FDIC, the regulator of the banking system that protects depositors. We had a quality team of people. And we went to the Federal Reserve in Dallas and said, we'd like a banking license. And they said, tell us what you're doing. We explained we're going to have a non-fractional reserve bank. So every dollar goes in,
the rules.
it'll just own a bond with the treasury. So there's nobody in the middle, nobody can go bust. And he said, it's a great idea and we're never going to give you a license.
Jesus.
I'm like, why? He's like, because you'll take all the deposits. If you have one bank that's safer than all the others, it takes all the deposits. So that kind of made me think, wow, okay,
this is rigged.
It's rigged against you, right?
Yeah.
And so I was writing about it in Global Macro Investor, and one of my clients wrote to me and said, Bitcoin. And this was 2012. And so I started digging into Bitcoin. By 2013, I wrote the first ever macro strategy piece to value Bitcoin. It was at $200. And I said, if I look at it versus gold, how much we know is above ground and how much we know is below ground, and look at that relationship, like with Bitcoin, what's mined and what's yet to be mined. It should be worth 700 ounces of gold. At the time, that would have been $1 million. And it was trading at 200. I'm like, maybe I'm wrong by 90%.
The financial world is abuzz with whispers of an extraordinary phenomenon that has caught the attention of seasoned investors and enthusiastic newcomers alike. Bitcoin's uncanny resemblance to its 2017 trajectory. Raoul Pal, a leading voice in global macroeconomic analysis, has hinted at a potential meteoric rise reminiscent of Bitcoin's past glory days. Could Bitcoin really soar once more, propelled by dollar weakness and massive Chinese economic stimulus? Welcome back to Investocracy Crypto.
So, Raoul, for people who are watching this and listening, they might be like, okay, that sounds amazing. That sounds like such the life, but I'm fucked. As you said, the system is rigged. I'm pissed. My mortgage is this, my insurance, the maintenance costs, or whatever it is. And they might be like, okay, but how do I do it? Because maybe you were at the right time in the right market at the right moment back in the day when your salary, you say, was like probably 3 times or something. So for you buying the house, the $200,000 was boom, there it is. Done. I won the game. But let's bring that to 2024. Let's pretend that aliens land in your backyard right now and they tell you, Raoul, explain to me what's going on.
You're calling Lauren an alien.
By the way, thank you, Lauren, for helping us. I appreciate it. Shout out to Lauren Mark, who's the producer of this podcast today. Let's say aliens appear right now and say, Raoul, explain to me what's going on with the financial system in 30 seconds right now. What's happening?
It's the same story. Too much debt, and everyone has to serve, and not enough economic activity to pay for the debt. So if you go back, you've got a big credit card bill. If your wages aren't going up, but your credit card bill keeps going up by 20% a year by interest, before you know it, your credit card bill just gets bigger and bigger and bigger, and you can't pay it back. Now, governments are lucky because what they've got is the ability to print money.
Right.
We don't get that. But it's the equivalent of getting another credit card to pay your credit card.
Yeah.
That's what's going on as the population of most of the Western world gets older. Old people, if you think of your parents or your grandparents, they spend less money and they don't do productive work because they've retired. So we're fighting this mega trend of the baby boomers from World War II. The kids who got born after World War II are now in their 70s. And that was the largest cohort of people in all history. And so what we've got is slow growth, but massive debt. So what is happening is governments are having to print more money. And again, anybody from South America understands this. They print more money to pay the debt. But your wages don't go up. They only go up a bit. But what happens is things like houses, scarce assets, houses, gold, or even your ability to buy US stocks, they just keep going up. So you're getting poorer. Your wages buy less. I'm not talking about buying bread and cheese. I'm talking about buying assets.
Raoul Pal recently shared his analysis on where Bitcoin might be heading next. His comparisons to the 2017 Bitcoin surge, when the currency skyrocketed from roughly $1,000 to nearly $20,000, have sparked widespread intrigue. Pal believes that the same economic indicators that fueled the previous rally are again at play, chiefly a weakening dollar and China's expansive financial interventions.
What we're finding is that those things, so that future opportunity for yourself, is becoming more unaffordable. It took me 3 times income to buy my first house, and now for the average person it's 10 times income. Oof. So you can buy less of a house. You can buy a third of a house versus what I could buy with the same economic circumstances. You know, when I was 28 years old, most people can't do it now. So this is the problem that is happening in the world, and this is not going away. And so governments are printing money to keep servicing this debt, which is, again, for anybody here who's from Argentina, Venezuela, anywhere, even Ecuador, everybody's done it. And then eventually the system collapses. The system doesn't collapse this time around because it's the US doing it, and the Europeans, and the Chinese. But it's really the US system of fiat money. Don't forget, the dollar is the world's reserve currency. Again, anybody from Latin America knows, what do they want? Dollars. They don't really give a shit about anything else. They want dollars. And dollars are 87% of world trade. It makes the world go round. The world is 400% of GDP in debt, of which 200% of that is dollars. Dollars, 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 dollars. And the US controls it all. It's called the world's reserve currency.
Right.
So when they debase currency, it's very difficult for them to lose control unless the entire world loses faith in the dollars. But then where do they go? There's no other currency. What are you going to do? Buy the euro? No, it's equally shit. Arguably worse. So they have this privilege of having the world's reserve currency. And then they debase it, and scarce assets across the world go up.
Meanwhile, similar to an economic sleight of hand, China is injecting significant liquidity into its banking sector, reportedly a cool $55 billion, with the intent to stimulate growth. These actions are predicted to free up financial liquidity, much of which may well end up in the crypto markets, an alluring prospect for investors like Pal. For now, Bitcoin is hanging just over $88,400, showing resilience after dipping to 3-month lows of $86,000 amid mounting inflation fears and global trade tensions. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So then what's the probability of scammed at the token level? 0. These are huge, distributed, multi-million people networks.
Speaking of Ethereum and Bitcoin.
Yeah. And Solana and many of the big ones.
By market cap, the top ones, kind of like the safer
Where
ones.
people lose their minds is they want to get rich quick.
Chasing the next meme coin, the next big thing.
Well, because people suddenly start to say, oh my God, I don't need to be trapped in the world of 10% a year in the stock market.
Right.
I've now been given this 100% a year, and then you become greedy. All you see is, I could make 1,000% or 10,000%. And then you do stupid shit. And that's when you get scammed. Because now you're exposing yourself away from the simple bets of investing in the technology layer to now you're investing in the applications layer. And that's when businesses are starting, who's building what, it's a meme coin, it's a DeFi protocol, it's all of these things.
ICOs back in 2017,
And then
2018.
you've got to ask yourself, are you qualified to be a venture capital investor, early stage? Are you doing the due diligence?
Taking the risk as well.
Taking the risk.
Yeah.
Right? They all are a power law. And so what that means is most of their bets go to somewhere near 0. Or let's say 20% go to 0, 50% don't do anything, and 10% make all the money.
As we wrap up this volatile yet exciting glimpse into Bitcoin's future, it's hard not to feel the surge of optimism. The prominent placement of catalysts, namely the weakening dollar and China's economic maneuvers, has revived investor hope that Bitcoin's ascent may be a question of when, not if. Analysts maintain that these movements could mark the beginning of a rewarding uptrend. With Bitcoin currently dancing around the $88,400 mark, it stands strong, potentially gearing up for a significant leap. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.